Welcome everybody, and welcome, of course, to the Tuesday Open here for the US stock market. We've got a whole bunch of stuff to go through today. Obviously, we'll be covering off on US indices, the leads coming into this week, which is going to be a volatile week, I'm sure. And then on top of that, we've got some crypto to talk about, the recovery here of Bitcoin, a few $1,000s up now off the base, what happened there and what is happening. And whether this is really some kind of real rally or whether it's just part of a more sinister devil plot, maybe by Wall Street to take advantage of our money. So we'll start off here by talking about actually just Bitcoin. I just want to mention this because a few of you wouldn't be aware. I posted on Twitter about this, just the Bitcoin production cost, energy cost versus obviously the total cost. And we don't often see Bitcoin breaching past this level. And it was a pretty significant level. Obviously, it pushed Bitcoin into a zone that hadn't been seen for a little while. And that was that 17,006. It was kind of the area that we suspected on the channel that it could come back to and find some buying pressure. So far, so good here for Bitcoin. Let's just quickly, actually, I'll use that one later. So we'll just and I'll use that one as well. We'll move over here to Bitcoin just to understand that markets fell. Markets recovering. Is this too early to call? Yeah, it is in terms of actually real recovery. And what a real recovery would look like is breaching through this area here. All this stuff that's sitting at 24 and 23. If we could box that up, which we can, of course, do, this is where I think the biggest short sellers sit. And they're all sitting there saying, we'll make the decision in the future what's going to happen with you, Bitcoin traders. But a little bit of relief, good news here for the Tuesday Open. And that's, of course, a little bit of an idea of risk on in the markets at this stage. Let's move over to the US 500. What levels do we have to contend with this week? We'll look at the top-down approach. So start off, we'll use the weekly. Now, a lot of you will know that I've been talking heaps about 3,500. The reason is 3,500 is a significant level, but it also has what we call the 200 simple moving average. And if we add that simple moving average, which we'll do now, so we'll use a moving average, we'll put it on here, and we'll just quickly modify this. Check that on as a 200. And we'll go to the green. I like green for some reason for the simple. There it is. It's sitting right there. And if you go through history and you load up the SPX, you'll notice that this point, and many other points, the market loves to come to the 200. Whether it does it now, we don't know. But in the future, it does tend to like bouncing off that zone. So be very careful of that this week, because as we go down into the timeframes, you're going to notice that things start to change. So here is the 2 hour. Where is the big critical levels moving forward? Well, we've got one, which is that level that we reached after the FOMC meeting, sitting just above the 3,800, right around that supply. We saw 3830 kind of area, I think, is a big critical zone. If we breach that this week, the most logical conclusion is probably that we are in a short-term uptrend and that we're in a relief rally. At that point, it becomes very plausible for us to go and fill the gaps that are here and obviously the one that's left here. And we'll do a correspondence between the gaps of the markets in a moment. So the key critical longer-term time frame to breach is here. The shorter-term time frame to breach has already technically happened during the futures market. So let's just quickly scroll down here and talk about today's session. So we had a low. We had a lower low marginally, but it is a lower low in the fake market futures. And then we've rallied through this box at this point, holding above. So when we now correspond this with the market, so let's now load the ES futures. So we'll just use futures here. Actually, we'll just load up the US 500 and look at it next to the real market. What you'll notice is we're leaving a gap that's pretty big here. So we're going to open theoretically at 37.30. So we'll bring that down, 37.30. And we have a closure that's formed at 36.74. So that's pretty low compared to where it is currently. We also have wicks at 37.05. So could this be a morning where it pulls back to these highs over here and then we move towards that closure of the previous level between the gaps? Or are we going to go all the way down before we rally? These are the two questions and the big problems that we have here and we're facing in this week. This is the, well, at least for today, these two questions need to be asked. What I'm thinking is probably more likely to come back and try to test around that 3,700. What you like to do is don't try to predict the pull off. So what's better is having a system that allows you to see that 3,700 and see the change of trend towards the bull side. If you don't see the change of trend and it keeps coming down, look for the fill into this and then potentially see the change of trend. If that doesn't occur and it keeps coming down, watch out, because what have we got down here? Equal lows or very close to equal lows. If we breach that level, 3,500 seems very plausible. What's the chat think though? Do you guys think it's bullish or bearish this week? Let us know right now in the chat. I'd be very interested to see your opinions. I think if we clear this bottom, it's unlikely that's going to be a false break, and it's more likely that we move towards the 3,500. So bears will rejoice underneath here. Bulls will be looking towards these highs around just above 3,700 this morning in the trade, and obviously looking at around that 3,674 from a technical level. Where will they be looking at potentially taking the position to? Well, let's scroll into the smaller timeframes here. Let's go down into a 15-minute just to see those gaps. So here are some of the gaps. There's the 3,700 highs. So you can see all that resistance. That's why it's going to be a pretty critical point. There's the gap change that would be there. So obviously the two important levels. And this is the previous one sitting around that 3,780. So any rally that hits 3,780 could be sellers here. Certainly could be sellers between 3,780, 38, kind of 30. That area there, good box zone to be looking towards the short, should you be trying to do that. And they're really the scenario levels. Everything in there in between is kind of noise to me. I like 37. I like 36.74. I like the short component that could come through in here to here. And I'm just going to be looking for those positional sizing. At this stage on the smaller time frame, considering the way the market's going to open up, it's changed marginally towards the bull side. We saw the biggest selling last week since 2008 in terms of just prime broker selling. I've got some charts here. If you missed today's video, let's just quickly go through this. This is prime book US equities. They sold at a portional rate that was monstrous. That can often be coincided with a bit of a squeeze. Here we see short selling and short covering. I'll zoom that in so you guys can see it. Big short selling was met by, of course, a little bit of covering. Makes sense. If you see incredible short selling, often you will get a cover after that. And that's what we're trying to look for. Why? Quadruple witching is probably the biggest event. Peak through to trough. Obviously, this is just a scenario here. Generally speaking, you do kind of get that 1 month, 3 month kind of bullishness. We're not seeing a market like this anymore, though, where it's this type of slowness like it used to be. Usually a recessionary market follows this type of trend, down, up, down, up, down, up. A non-recessionary market, which we're probably not in, would look like this kind of possibly being a base and then moving forward. But we'll have to see a bunch of reports come out and really see what Wall Street's doing. I'll be introducing a new segment, I believe, in the future on the show, which will be looking at certain reports and then really reading into what the larger commercial traders are doing. And hopefully you guys will really enjoy that. If you are enjoying the stream as well, just let me know by giving it a bit of a thumbs up. If you like it, it does help us out. Also, a quick reminder, today's stream is sponsored by Tiger Brokers. So if you're interested, we'll look at their platform when the market opens and use it a bit, which obviously we love doing. But if you're interested in any of the free promotions, especially if you're from Australia, there's a special promotion. The link's in, I think, the description or something like that. So you can check it out and get involved, because there's free Apple stock and some other things if you open the account at the moment, which is pretty cool. So we'll move over to the US 500 again. Here's what it looks like cleanly. With the gap, we've got the resistance. We've got smooth sailing above this event, I believe. So at that point, we move towards more of the bull case, and we've got the marginal bull here in the morning. The marginal bull basically just means we made a new low, we've breached, we've changed the first direction, and the sells could be met by demand. And that's going to be a good sign. So it's the first little positive sign we've seen since over here in that whole FOMC disaster. The market's been mostly negative, so there's no doubt that there's There's still a very heavy trend towards the downside. If you're feeling bearish, which you totally could be, you really don't need to feel bullish until the market goes through this level here. So until it gets through this area, you just don't have much choice in terms of thinking, oh, yes, this is hugely bullish or anything like that. Well, it's not. It's marginally bullish. And that means that the statistics, if you choose to buy these types of levels, are not as strong as the statistics when things change. Think about over here when we went bullish at this point. That was a much stronger signal. And that would be a similar signal to what you're getting in this point here. Did it begin a nice rally? Absolutely. Absolutely, it did. And then we had the defended zone. And then, of course, the defended zone got broken. If you look at the real market, some people call it a Wyckoff, which is fair enough because there was that false break. And then it began one of the biggest short sells that we've seen in some time. So that short sell is still ever present. And I think the US 500 shows us that there is some risk here. Let's move over to the DXY. What's going on in the old US dollar? Is that weakening? Well, there are some good signs here for the bears and the bulls, obviously, in the US stock market. The US dollar about a few hours ago fell through. So what this means is it weakened. It fell through this little critical area, effectively changing the trend. And now we would like to see the US dollar continue to go down. New low would be fantastic. And that should force through potentially further shorting here on the US dollar. That occurs. What do we mean? Well, it shows us, guys, that money's potentially coming out of US dollars, or at least the US dollar is weakening, and it could be going into risk. So we've got that downward trend at the moment. We've got a very strong kind of level that was just breached. And if we keep going weaker, money flow is what we're looking for here. We're really looking for that kind of level. Yoko's Plant Life says, when I click to join the Discord, it says unable to accept invite. Possibly one of the mods, Marvin the Martian, has put one in there. I'll just chuck it on the screen. You can certainly join our Discord through that link. It should work fine. Westerosi Ninja says, if yields in Japan go up, I doubt the DXY will go down. Well, that's true as well. Just one of the indicators that obviously you look for here, Westerosi. So we've got here DXY. That's one of them. Obviously got copper as well. Some basic form of recovery here on copper. Dr. Copper has been very sick recently. It's putting pressure on this downward side. And as you guys would know, this looks like a giant Wyckoff distribution. So not too positive on the economy from this standpoint. What we've got here is pretty weak from setup of Dr. Copper, but it's kind of holding as best it can. US 2-year, as we know, this is very susceptible to the S&P 500 at the moment. If anyone's never put a SPX on top, I definitely suggest putting the SPX on top and having a look at the interrelation between both of them. And we've got here US 2-year down 1.22 and the 10-year, unfortunately, up 0.42. We'd like to see those make new lows this week. For you to feel successful and feel bullish in this market, this thing needs to make a new low because we need yields to turn around. Are there some signs that's happening? Really, it's just in shipping. There's not many good bits of news coming out. And we might require a real catalyst of good news to say that there's investment grade movements here going on in the markets. Remember, there's a difference between trading, guys, and having a stop loss and having a plan of a stop loss or something like that, or at least a plan to get out. And there's a massive difference between an investor. An investor's going to have a hard time buying right now. What positives do we have out there? And I'm going to ask the community this. Guys, do we have any positives right now in the markets? What positives and what do you have on your little list of checklists? I can think of a lot of negatives. I can't think of too many positives. So let me know if you've got one. Philip Crane says the way Tom says Dr. Copper. It's like Dr. Pepper, yeah? The doctor is in the building, Dr. Pepper. European heat wave. KC says none. 10-cent Murphy says, I hope that means you didn't buy 10-cent. Nope, I'm 100% cash and gold. Fair enough. Paris Saint-Germain says unemployment. Yeah, okay, cool. So basically a non-weakness in unemployment rate. Symptomatic of usually a stagflation type of economy and those things where you've got kind of runaway inflation, still decent employment. That's the symptoms of the stagflation. Let's have a look at gold. Speaking of that, I'm still seeing some of your comments coming through. Yeah, gold, interesting one. Comes down and it's trying its best to get a turnaround, but we haven't really seen anything yet that makes us super excited. We do have a bit of a downward trend. We're putting pressure on that early. If the DXY, that is the US dollar, actually drops, probably expect gold to maybe see some recovery here. It's trying its best. I'd like to see it through this level here and obviously breach at least that. So you can go bang, bang, bang. That would be a bigger tick. And that level, just so you guys can see, is 1842 now. I'd like it to clean past 1845, but 1842 as well. And then that will allow us to potentially move back into these peaks here around 1866. That would be very good. This channel has more squiggly lines than others put together squared. Yeah, I've got a lot of boxes here. We can get rid of this one, but there are a lot of boxes here. Yeah, that's true. The boxes are there for reasons. I can remove them. It's not really too needed. In fact, I prefer to trade with nothing on them. I just leave boxes in areas that you guys can see. Do you like the box? Do you not like the box? Let me know. Oil trending lower? Good. I want oil to go down. Oil's a super interesting one. Huge amounts of congestion here in terms of a possible distribution or at least some type of movement. Could even be a false one. This is the type of trade where if I was sniffing it out, I would think it's more likely to kind of go to the downside than the upside. Could be wrong, but at this stage it goes, I'd like to see this boom like that, like a nice dirty shooting star kind of pin bar thing that happens, and then it starts rejecting and it goes through and we start to see that really heavy short on it. Obviously I am a bit of a bear on the oil at this stage because of what happened up here in our red box. But this is the best kind of, this was really where it all began. This is where it began. Markets turned around, and at this stage we're still short on the general concept of oil, and any of this consolidation, even if it breaches up, will really remain in a short kind of trend until we breach through here. So from just like literally how aggressive this is, smaller time frames may change, but the big ones won't change till we get above this area up here. Fernando has negatives, second year Dem Prez. Yeah. So obviously midterm election as well. Stagflation. Yes, that's not good. Rates, the word that I get banned for. China, yields broke out. Not good. Positive. Short covering. I like the way you think. Short covering. We got one positive, guys. I like that one. Small time frame trend change. Yes. Oil drop from peak. Nice. I like that. So we've got short covering is what you're trying to say. That's the one we have. We got short covering, guys. But yes, it does make us really kind of going with the idea of we've got to be fast, we've got to be nimble. And as we say, when the VIX high environment, you've got to be prepared to switch your opinion pretty quickly. This is not the environment for the swing trader. The swing trader gets brutalized and bashed unless they're always short. And even then, believe me when I say, and you guys saw it back in March, the rip rallies on bearish style markets are brutal. When the market turns, it can do 10, 15, even 20% up and still be in a bear market. That's how bizarre these times are. US oil, interesting. Let's have a look at Brent. I just want to see what Brent's doing. So I'll bring up Brent cash here. So Brent's trading a little bit differently. Very similar setup, very similar start to the whole thing. Yet Brent has actually broken out a little bit here and it's come back to this little zone. Still in a negative downtrend, but not coiled as much as US oil is. Very interesting. Brent sometimes does lead, so you've got to be a little bit careful here. And it is worthwhile if you're an oil trader to have both on your charts. But yes, at this stage, that's it. I'm going to remove this. It's kind of annoying me. Get rid of the volume profile. That's better. HB says, oil and copper, for me, the charts to pay close attention to as predictors for inflation and the economy. Yeah, so they're good predictors. Well, actually, there are other ways of doing it, but you are correct. Copper and oil can often tell you things about demand. They can also tell you about inflation. They're actually, you're absolutely 100% correct on one thing, and that is the way that US 10-year is synergized with certain sectors. So if you actually don't know this, and I'll give you away this little tip for free, that you have a correlation generally with US 10Y and XLE. So if we go out, not an hour, of course, but if you go out to a longer time frame, what you'll notice is that there's a strong correlation with oil and the 10-year and the lower yields as well. Basically, if yields are going down, bad for oil. If yields are going up, good for oil. You're probably starting to process that already in your mind, but this is usually the way that things work. So if oil is going down, it doesn't usually the bond market's usually pretty smart, so it doesn't usually precursor it. But yes, oil going down as well as copper being the metal, that can certainly show you that maybe we're seeing that peaking of inflation. Doesn't necessarily mean it's all golden goose and we buy the market and we feel all great about it, unfortunately. But this correlation is certainly here, and it's worthwhile understanding that the markets are all linked. Bonds, important. Metals, important. Stocks, awesome. They're all linked together. Super important. Thank you very much to the 1,000 people joining us here for this morning as well. We do have a slightly green market. The story of this week will be whether we see a bit of a short squeeze turnaround. We have seen the beginning of that on the US 500, which we'll check out later. We've got about 35 minutes till the market opens, so not too long now till it all happens. We'll go through a few others. We've got gold, obviously, trying its best to pick up. We've got US oil in the little range here on the smaller time frame. So that's on that 1 hour. We'll find out how that ends up trading. Could be very, very interesting, the explosive move that could come out of this condensed range while we wait the US market. And we've got the VIX here to discuss as well. VIX down to 30. It's back to a 5 level. Not really technical at this point. I think you're guessing, really. Obviously, if the market goes up, the VIX usually will go down. But the key here is always to have like a 35 on your chart, guys. This is a big, important level. 35 has always done me well on the old VIX. And a few of you have kind of worked out those kind of concepts. Trading the VIX is dangerous, very, very dangerous. But 35 is a super interesting zone. And most people, and I'll just tell you this, I've been talking to a few people in the industry. I did a webinar today for a company as well, and we were talking about it. The idea of normal capitulation in markets, that is normally hitting an extreme low, so the real turnaround lows, happens with a VIX blowout. So we usually see like a huge VIX blowout, and that VIX blowout pushes into the 40s, the 45s, the 48s, and that is close to the low. It's effectively a capitulation or a fear signal. Now, we haven't seen that so much considering all the fear this year. We haven't had incredible VIX blowouts. The last VIX blowout we had was the 25th of Jan. If you go back through history, there are periods, this one comes to mind. We had a huge VIX blowout in 18 at the beginning, and then we had a nice big one here at the end of December in 18. Then, of course, we had the pandemic one and everything else. So big VIX blowouts are historically usually when you get those lows in. But we're not seeing that just at this stage. I saw a few people as well mentioning PCCIs and noticing the changes there. And I also saw a few people mentioning PCC. And if you load up PCC, have a look at this, guys. Oh, my goodness. What the? I mean, it really shows how many puts were really entered into the system. Again, the squeeze component comes in here. Wow. That's a big number. That's the similar point that we actually got here in the 18th of March. Now, we know that wasn't the low of the stock market. The stock market went a little bit lower in the back of March, but geez, I tell you what, the PCC was through the roof here. Thanks very much, Terry. And also thanks to the donators coming in here. The new guy, $4.99. Hi, Tom from Los Angeles. Thank you very much. What do you think about Tesla for day trading? I would like to make money today, smiley face. A lot of us would. A lot of us would. Yeah, we'll check it out right now. So thank you very much for that donation. And we've got a massive donation coming in as well from Gungadin, $20. Thank you very much, Gungadin. Give him a clap. Thank you very much. Appreciate the support. Donate some money, guys. That's what he says. All right. I appreciate that very much. Thank you. Let's check out Tesla. So yeah, the real story this week is the short squeeze component. And someone says I have misspelt something. Look, I put it in there about 30 seconds before go time. So yeah, if it is, sorry about that, guys. All right, let's move over to Tesla. Tesla is in the demand area, obviously down in this 625. Anything in here is been bought previously a few times. It's what I would call a defended demand zone. It got bought 3 times here, resistance previously, long leg doji set here, bought on the previous capitulation. For whatever reason, Tesla traders like the 625. I don't know why they like the 625, but they do. They like this level. So if we dial in a little bit more, Tesla is not so much going to do its own thing. It's mostly going to follow the stock market. So if the stock market's up, Tesla will do well as well. Pre-market here is 2.86%. So basically it's at a 668 pre-market. And that's a pretty strong number coming out. Not exceptional, but pretty strong, especially considering we're only up now 0.32 today on the US. But as we know, that's 2 days now worth of US futures. So it's a little bit more in terms of the open. How do I feel about this? I think that to break 700 is the big deal that I would go on and on and on about. But from a day trade perspective, you're really just trying to play it Tesla based on the market. So what you're going is you're saying, okay, I will look at the Nasdaq. I will look for the pullback in the Nasdaq. Let's say the pullback was to 11.3. Let's just say you thought that was a strong demand zone. Market comes down. Market makes the switch. Instead of buying the Nasdaq at that point, what would you do? You would most likely look towards a very, very, very strong kind of Tesla position instead, because of course, if the Nasdaq's going long, you believe it's going long. What should happen? Tesla should probably give you superior percentage move. Doesn't mean it doesn't give you superior risk as well, but if Tesla moves and the Nasdaq's moving, if the Nasdaq does 2%, there's a good chance that Tesla probably did 4% or even 5%. So it's like the crazy version of it, yeah? So if the Nasdaq does 2, because it's an index, 4 to 5% is what you'll probably get out of something like a Tesla. So that's how I would look at it. And this 11.3 is a bit of a defended zone here in the futures market at this stage. So pullbacks, ideally, we would see turnarounds in here, and that would be consistent with our S&P 500 approach as well. $3D says, I missed the $1,200 Tesla sell, but got it at millions of ones. If you sold it there, well done. Michigan Dirt Bike and Trail. Make sure you visit Michigan Dirt Bike and Trail reviews, guys. Looks like there's some pretty sick action going on there. Anyone watch the F1 on the weekend? Let me just tell you this. Ferrari is a disgrace. That's all. I won't get too much into the sport other than that, but Ferrari is still a disgrace, guys. They're terrible. Terrible, terrible, terrible. Here's a thing coming through from Colby. Says, when market goes green, NVIDIA has extremely strong green move upwards of 10%. Yep, that's correct. It's another very strong retail herd kind of stock position, often gets bought incredibly by the algorithm. It's one of those high growth stocks. Kevin. This week maybe, but think about what happened to Charles. Just it's terrible, man. They're horrors. I think all of us could do better pit stops than Ferrari could. But in terms of the pit stops of this market, at this stage, it really is touch and go on buys here. I could see bear cases, I can see bull cases. The main thing is to breach these levels, to basically go up and through and then get pullbacks that will most likely at that stage be long. That's the really significant point here. This 11,750 for the Nasdaq, for the S&P 500, it's going to be this around this area here, that 3830, the FOMC highs after all of those shenanigans that went on in this candle here. These are going to be the most critical points. This is slightly up, and I would be leaning towards the bull side here with a bear pull maybe in the mornings. Hopefully by the afternoons, we're getting bullish plays. Everything is obviously a statistical guess, guys. If you don't feel comfortable with something in the markets and you're not happy with your system, or you're not happy that you understand the markets, you can always move to some of the other markets right now. Currencies have been pretty good. I always have a little bit of a rule. If the VIX is greater than 25, my general rule is to focus on SPY, Dow, IWM, gold, maybe oil as well, and then, of course, currencies. Why? Because it's so hard to pick stocks in these periods of time. You're really more likely dollar cost averaging, or if you are picking a stock to get that higher move percentage, another option is just using a small amount of leverage on, of course, the index market. Or the other thing that we could do is we could just say, okay, maybe we see something happen on the SPY and we move over to something like that NVIDIA or Tesla play. I see some of your comments. That's very good. No worries, Just Liberty. Thank you for subscribing. Appreciate that. Thank you very much. Michigan Dirt Bike and Trail has a question. New subscriber. Definitely got to give you the limelight here. Do you think Hyper is breaking out? CRISPR, RK, maybe even China ETFs? Well, what a great segment into our sponsor of today's video, which is Tiger Brokers. You guys know that I absolutely love talking about sectors and rotations. So let's go over here, use a heat map here, and understand top 50 for the last couple of days. So we'll go last percentage day change. And you're saying, has Hyper broken out? So, what you're really looking for here is what sectors have been doing better and what sectors have been doing poorly. So if you go to a 10%, 10 day, it's all horrible. And most of the sectors are doing very, very, very poorly here on the chart. You notice that almost everything doesn't do very well. Bio actually is one of the lighter reds, which means it lost less percentage over that period of time. We go to a 5-day and notice something down here. Oh, you've lost it. 1 second. Sorry, guys. There we go. Now we can see bio. So we'll switch back to the 10-day. Bio negative 4.89. 5-day bio negative 0.68. So what's that telling us instantly without even looking at a chart? It's holding comparatively better than most of these other reds. In fact, it's the only one that's close to green. So that already starts to bring in your argument a little bit better. Then we click on 1-day percentage and you notice that biotechnology. So it's actually been happening for a few days through this sell that while bio has been dropping or staying sideways, it's been in general performing better than the rest of the market. And in fact, it is close to the best sector in this market right now. So that's really, really big here. Truly says, what the hell? It is all red. Yeah. It is all red. It was a red fest. So let's move over to the bio sector. You asked about CRISPR here. So this is CRISPR. It's a biotech stock, obviously in genetic resequencing and all the CRISPR style stuff. It's forming base, and this is very interesting because this stock got brutalized. I mean, where are we now? We're all the way back to at the low. We went to 42. Obviously, incredible amounts of transactions going on here. Look at these volumes coming through, massive volumes on CRISP, and bio is technically breaching and actually pulled back. It was a good spot if you picked that up in the last week. Yeah, quite an interesting one. Pretty good. Let's have a look at a couple of others here. Beam, another stock that's in that kind of area. CRISPR style tech, again, looking like it's forming bases. These stocks are tough to pick on the bottom though. And then we go over to ARK and ARKG. So let's have a look at ARK. ARK, Tesla really probably holding it down here, plus a few of the other picks. You guys would know I am not a fan of the picks in this portfolio. I don't like Roku. I don't like Zoom. I think they suck, but I've thought maybe they're good now at this value, but I've thought they suck for a long time. You'll see I've got a little red box, and that red box dictates the lows. And I wanted to make a video about this, and maybe you guys will like it right now. Maybe we can do it right now. This is the super interesting thing about markets right now. Where are we? So we know that we're at pandemic lows, okay? And I want to bring up a second stock, Amazon. And this is all going to make sense in a second. Amazon is sitting at, let's call it, can we call it here 2018, September? Yeah, that's fair. Okay, so that's interesting. And then let's get Netflix, another monstrously hated stock. So we had 2018, we had the pandemic lows, and then we have 2017 July. Fair? Now I ask you, the chat, you guys know, you got big brains, you know what's up. I know you all know what's up. So have these stocks all technically built their businesses since the pandemic in terms of their business has actually grown? So Netflix, then we have Amazon, and we have most of ARK stock. Have they technically mostly built their businesses? So if we price them onto this chart and we put like a little tag on them, let's say, we'll put little tags here. This one here is ARK. This one here, oh, we need to go back to 2018. So we'll go 2018 September. This one here is Amazon. And the other one was somewhere around 17. Yeah. So we'll just go with this low, whatever. That's fine. So this was Netflix, somewhere in here. So these stocks are trading at prices that are already, like, the market has fallen a further 37%, 20%, and 33.85%. And I guess when we put it in perspective of this way, is what I'm getting at is this chart here, which is QQQ versus SPY. Or actually, yeah, that way around. If we go log on this and we move logarithmic, which I've done on the channel a few times, we're at a very important ratio. And that ratio is to do with risk on, risk off. Effectively, the market has been brutalizing risk off all year. It's saying, we're going to destroy all tech stocks. Look at us. Look how bad everything is. And people have moved recently into energy, into metals, into those things. And utilities and all these defensives. They've suddenly spread that idea to everybody. But at this point, isn't this technically an area where you would think, okay, well, maybe the ratio will switch back due to the fact that it's held for decades? And that's where we are right now. So I think it's a great point you bring up here. And that is, this is what's happening. We're seeing risk back on in the markets, and we expect risk, that is tech stocks in general, at this stage, if we see recoveries, to outperform the SPY, purely because of the oversold nature of the Nasdaq versus the SPY at this point. 10-cent Murphy brings up the point here, sure, but isn't going it isn't going to be tech rising. It's going to be the rest of the market tanking faster, relatively speaking. Relative trades are trades, 10 cents. So you can actually do long short. Remember, most of those hedge funds, that's what they do. They do long short. So they do those types of concepts. So these markets are all getting close to this turnaround, this very pivotal point here. I would say that ARK's funds have certainly. You're not talking about this fund manager. You're talking about Tesla. Tesla grew. Are you talking about Roku? Roku grew. They technically grew underneath. Zoom grew as well since the pandemic. It's just that they were all heavily overvalued. There's another great question here. Get a green rectangle in there for Meta. That'd be like launch. That'd be IPO. No, it's not IPO, but it'd be pretty bad. With supply issues, Amazon is still vulnerable. They're all vulnerable. I totally agree with you. I'm just saying proportionately, it's interesting they're sold out so much. So when we go and look at something like an XBI, which is the biotech industry, and you see this huge volume accumulation going on here. I mean, this is big volume, consistent volume for a while now. Like we zoom this out. What the hell? What's going on here? Big volume for a while. Remember Wyckoff, he had 3 laws. One of his laws was the law of effort. And at the moment, there's very little movement in comparison. There's a ton of volume. So I do get what you're saying. I mean, they're not really for me at these prices. I like to just focus on my indices. I have my rules and I stick to them because I don't like breaking them. I've broken them once before or twice before in the last couple of years. No, they never work out. Yeah, I don't like breaking the rules. Breaking the rules is bad. When you break the rules, you might accidentally get in bed with Square and Jack Dorsey, and you don't want that. No, we don't want Square and Jack Dorsey. that's too dangerous. All right, Michael, we'll give you some love. You also do the mountain bike reviews, it sounds like. Check out Michael, mountain bike reviews. There we go. Scott Fitzpatrick says, Devil's advocate, we haven't had this kind of inflation in decades. No. So the inflation component, look, you are not wrong. No bear is wrong here. You could throw so many bad things. Inflation, is it incredibly bad? Yes. I'll tell you this. Did you know that inflation, once it gets past 5%, so just think of this for a second here. Once it gets past 5%, inflation has never been stopped, never in history been stopped without pushing the interest rate above, that is higher than the core rate. So to give you a perspective of this, that would mean that we need interest rates to be at 8.6% right now, or whatever it is, to beat inflation, Volcker style. Do you know how bad that is? Impossible. If that happened, then we would, I mean, what do you guys think? I don't think that would happen. It'd be like the US and other countries would default. So this is either the first time that doesn't work and it gets violated, or something really bad happens. I mean, this is the truth. This is what's happened. When inflation has gone 5 or 5.5, it's never been beaten without pushing interest rates, that is the Fed rate, pushing up past the inflation number. It's just really crazy. We got I don't know, Gnosis? I'm not too sure. He says $10. Thank you very much. And you say here, what do you think of Livent, LTHM, a lithium miner? We'll check it out in a second. Thank you. So just, another big bit of information that might help you. But I totally get all bears. Bears are correct at this point. There is no strong catalyst other than squeezing and just general market manipulation that could tell you to go long. My personal strongest opinion will not change. If China say supply online, If they say supply online, I am going to pay attention. If they say we're opening up, scrapping COVID policy, oh, what a good bit of news that would be. But until they do that, it's unfortunately a huge negative that can cause inflation. There is one other positive. We've seen shipping cost come down recently, but the only reason shipping cost is coming down so much is demand is getting front filled by the Fed, destroying it. So that's a huge thing. Thank you also to the 1,285 people joining us. Actually, 1,300 now. Thanks so much, guys. If you enjoy the streams, please do subscribe. We're getting close to 100K, which is just phenomenal. So we have here a question about this particular lithium miner, it sounds like. I hope this is one, LTHM. It's a lithium miner, I believe. What do I think about lithium? You know, I've seen lithium go up and down a few times, and it usually ends badly if it's on a big run. This particular stock doesn't seem to be doing the same type of run as some of the others. It's coming down to a supporty demand area, which will sit around this 2060 to 1988. But what I would do is instead look at other lithium stocks as well, not just this one. This might be a strong one. I don't know. It doesn't have much history. But lithium is prone to super bull markets and incredible busts. So the way I would look at lithium is to go and look at a bunch of the biggest lithium stocks, bring them up, see the bull runs, see the bear busts, and then figure out whether all of those are currently busting to new lows. And maybe this is just one of the stronger kind of stocks there. Because realistically, lithium is a growth, but some of these stocks are valued still way too highly. So look at the average through older stocks. Look at how much they're usually valued at. Get the PE ratios, get the PS ratios. People should know how to value these companies. And if they're too far above the mean and median, I personally don't like them. Who said deflation is coming? How will today end? That's a big question there. Thanks very much, Monica. Always appreciate you and everybody else that's come here. We've got names that have come here for over, geez, some of you guys have been here for 2-3 years. I appreciate it. So we're about 10 minutes away from the market open. This is usually where we like to jump back in. Just wanted to let you guys know, of course, this is a sponsored video, sponsored by Tiger Broker. If you're interested, if you're interested in getting involved in their platform, this is their platform here. It's got a whole bunch of sector stuff. You can always jump over to the links. There's plenty of links in the description down below if you're from another country other than Australia, obviously US, Singapore, and New Zealand, and many others. And it's got a really great platform. I particularly like the heat map, the industry sector, all of those types of things. And we'll use it into the open. But let's have a look here at the pre-market change. What's actually doing well and poorly? So we'll go S&P 500 stocks. Looks like we've got VeriSign. We have a few others. Adobe. Not too many reds, mostly greens. Kellogg, Atmos, Garmin. Some of these are the big kind of percentages here. 3% plus. Royal Caribbean. Cruises sitting up 3% as well. Nucor, so a bit of metals doing a small recovery here today. And as we scroll through, we can see all of those. So yeah, a decent switch here in the market, certainly a bit more bullish. Let's recap this US 500 coming into the market open, and we'll use this chart. By the way, do you guys prefer we use US 500 or you prefer ES futures? I don't really mind. Same thing. Obviously, some of you will trade ES, some of you will trade these CFD codes. They technically have the same or very similar price. So markets are coming in with a gap. We need to be aware of that gap. Basically, the gap will sit around that 36 level down here. This is where the previous market closed. We do have some supports around 3,700. So just remember this 3,700 is going to be an interesting zone here in the open. And then 3660, this kind of level down here that we left with the gap. Other gaps that we want filled, ideally we get a 3780 sometime today. That would be very, very cool. Getting a 3780, if you're feeling bearish, between 3780 and 38 kind of 20 turnarounds could be prevalent. You're looking for these types of signals. And if you get that type of signal there, then bearishness could really come back into this market. If you want to wait and see, and that's your type of trade plan, the more conceptual kind of idea would be to see a change, breach of the 38.30, 38.40 zone, pull back against that, effectively creating an inverse head and shoulders, and then we move back through. And that's kind of how an inverse head and shoulders will usually be made. It'll be made through breaching a zone, pulling back to grab liquidity, and then moving towards filling these other gaps. So we are feeling a little bit bullish here on this session, even though there could be a bearish movement first. Main reason and only reason really that I see, short squeeze. And that's just because so many shorts were done last week. We saw in certain reports as well that there were net positives coming out, even on the Tuesday. So there has been some buying, and I'm going to be very interested in seeing the report at the end of this week as well, which we'll start to bring into the charts. William says, Tom, what's going on with uranium charts? Lots of head and shoulders. A lot of the uranium, the steel, all of these kind of any metal, anything like that, the spread of that concept, or that being the big thing that's been occurring here in the markets, that's starting to really fade away. So we do need to be aware of that one. What's up with the PCC ratio? Yeah, it's weird. It's really high. Really, really, really high. So the PCC is like a 2.4 reading. We haven't seen that in a long time. I'll just show you the PCC ratio so you guys can see it. Here it is. Oh, did it just drop back down? No, the daily is still really high. I'm not too sure if that's a real read. But if we put this on a line chart, it's a massive read. It's got to be, you would think, false. I just don't believe that reads correct. PCC is very bit dodgy. It's a bit dodgy. I just go to the CBOE and pull it up off that. I didn't do that. So the gaps, as we know, here's the gap 1, gap 2, gap 3, previous close 37.64, current open 37.30. Percentage difference between this and 37.30 is 1.53% open bullishness. You would at least expect the market to probably come and at least, you would think, test like a 3700. If it does end up just busting all the way up to here, trying to fill this gap at 3780, be careful for the bear here, guys. That's going to be very, very scary because the bear will come in trying to fill, I think, to the downside. Remember, this is still a mostly negative market. Just because we saw at this stage with the open a change of trend, it is incredibly marginal. That's all the slither that changes from the bearishness to the bullishness. Super, super close on these markets here. I think it's misread. Yep, I agree. Manuel says, what do you like to do after a day of trading? Maybe it's a good chat for the comment for the chat here. Chat, what do you guys like to do after a day of trading? Personally, I like to smash watermelons. If it's a bad day, we smash watermelons. And if it's a good day, we go out to the sea. Fair, yeah? Everhart Productions doesn't stop. Trade some more. And of course, because I'm partially American, even though I'm Australian, I like to use a baseball bat, guys. Baseball bat. Very strong. Tim M likes to eat lobsters. All sorts of things. So the market coming in, pretty cool. Good to see some green. Horrible shorting, obviously occurring last week. Just quick rundown. Prime US brokerage, second biggest short in the history of the shorts that they see, which is bizarre to me in some ways. Short selling can enter short covering, which is, of course, the story that we're trying to go with here in terms of hopefully we are seeing the beginning of that and the movement round that often does come in terms of covers afterwards. We'll find out. And then, of course, here's some stats from when we go to the declining bear market. What happens 1 month, 3 months? Look, our good friends Goldman, they came up with it. Thank you very much, Goldman Sachs, global investment research firm. Appreciate that. Recession in subsequent 12 months. It's not a good stat, guys. Mostly a Y, not an N. Mostly a Y. 2 minutes till the open here. We'll get back into the charts in just a second. Obviously, the speed at which this year has sold off allows for some of these crunch kind of recoveries. But if this is a recessionary tight market, it does tend to have lower lows. And do remember, we still have the 3,500 and the 3,200. We have not seen what is traditional of the end of markets, which is capitulation. And that is usually the traditional end. If you go back and look at the SPY or any great real short off in markets, they usually almost always end in some kind of ballistic sell-off. Some people could say, well, that was ballistic. I tend to agree it was pretty aggressive. And even through these history, it was pretty aggressive. But sometimes it just goes that little bit too much, such as over here. Everyone thinks that's the end. Nope. Does that look familiar? Everyone thinks that's the end. Nope. Maybe it is. Maybe it is the bottom for now. Big volume. So Tuesday open, first day of the week for the open. Here we go. We are close. The countdown's on. 8 seconds till it happens. And we are open. So we have opened up here. Markets are stable for now. Let's go through some of these stocks. 37.31 being printed on the SPX. So let's go down to the 1 hour and we'll check that out. So 1 hour opening, nice big green in the middle of nowhere land. I mean, that's a pretty stupid candle when you think about it. But markets still 3,700, a lot of wicks and big levels here. Possible short into that zone could be possible here. Square 3.83, Apple they're up 1.41, Amazon 1.9. Look at Beam coming out 6.4. So whoever's mentioned biotech before, if they were on that, they're pretty happy in that pre-market. CRISPR 3.91, that's up another 2 since we looked at it. Now 4.11. So again, bio kind of showing those zones. Let's check out Tiger here. Move over to the US, move the sectors. We'll do a quick percentage change here for the top 50 market. And we've got, go actually top 50. We'll get out of all. So we have here what looks like a pretty strong morning from automobile manufacturers, semiconductors, diversified banks, diversified metals, and mining. The only sector that's down here in the session open. So quite a few sectors doing very, very well. Some of the ones that are a bit weaker, defensives like soft drinks and restaurants and things. So biotech doing pretty nicely here. You can see all those stocks. Wow, some of these are up 88%. Wouldn't you love to be in Valen? Whatever that. I don't think Valen will be safe right now, but Valen, nice, 80%. Anybody have that Bizarro stock? But yeah, big moves. We'll just switch that quickly here to the percentage change again. Yep, 1.84 now. So pretty strong. Good stuff. Chewy says, and this is a great question, I don't get it. Why buy oil? Who wants to own oil in 20 years? Its investor base is scared. Oh, okay, I won't read that bit. Who sold the bottom? Well, the reason why oil is so big is because when you think about it, even to get to the green revolution, we need to burn a ton of oil. And that's the counter logic that often gets people in investment. It's you have to burn a lot, and they're going to just completely make as much money as possible from oil reserves until those types of things happen. So the counter logic is the big play in these markets, the counter logic. Liam says, Powell softer than a towel. Yep. True, Mobius, absolutely. Bizarre to see silver up, gold down over 3%, and they don't seem to like each other anymore. Mainly because what you're seeing is you're seeing an improvement in some metals, and it's the silver useful component that's coming through. Remember, silver is I treat gold as a currency, a form of store of value or currency. Silver is partial currency, mostly useful metal. It's like a hybrid. It's like Ethereum in crypto terms. By the way, Bitcoin now 21,257. So decent, strong buyout here, 37.40. Maybe we move towards the gap fill. Be very careful around here, guys. The people that are long, 37.82 being that top at the gap. So that's going to be something. Short squeeze is the discussion of the day. Big volume, obviously, through the Friday stupid day. What you can say, one thing about quad witching is always watch that Thursday. The Thursday is a horror show. It's always the sneaky one, you know what I mean? The Thursday before quadruple witching tends to hold the big sneakiness. SHIB up 20%. Okay. How much is it down? PT. Do I dare look at SHIB? I haven't looked at SHIB in months. Let me do it. Let me bring this horror thing up. And yes, I call it horror. Sorry if your SHIB isn't even a maximalist. I don't even know what it is. I don't like pictures of the dog. I don't trust it. I didn't trust it here. I don't trust it here. I don't trust it here. Anyway. But that's because I'm old. I'm too old for the SHIB. I don't understand it. Yeah, over here is the level where it all came off. So if you were going to hammer it, I guess that's a good zone. But geez, it's down hard. SHIB got destroyed. Nasdaq outperforming SPY as pretty much predicted. Makes sense. If you have risk on at the moment, Nasdaq should outperform SPY. New high just put in then. Pretty strong stuff. Thank you also to 1,363 viewers. I'd like to just ask you guys as well, what would you like to see more of on the show? Obviously, I do have some limitations here in Australia, but I'd love to know what you guys would like to see more of. More index, more stock, more sectors, more whatever. Just let me know. SHIB got shivved. Sol looks so good. You sure about that? Misty says somehow bankruptcy is hot now. I'll never get over Hertz. More macro, please. Fair enough. Probably would be good for the shows, considering we do them once a week here. Absolutely. I'll try to, Manuel. We'll see what we can do. Depends on license, etc. 3D printing sector. More index. Why Nasdaq going up today? Danny, the question is not why is it going up? It's who's putting it up, who's actually buying it up. Look, the main reason is huge short from last week, probably getting partially covered here. We just have to hope it's real. So just go back to the stream, look about 20 minutes in, you'll see more silver and miners. Fair enough. More BTC, more international. Fair enough. We've got plenty of information on all these sorts. Well, let's have a look at the international market here. We'll look at the DAX. What's the old... Oh, the DAX is not liking itself. Oh, no. What the hell? It's down more than I thought it would be. Okay, so DAX coming back. Weakness in that one. So it really is more of a lead risk-on stock. Let's have a look at XLY, XLP here in the morning, see how that's opened up. I assume it's going to be quite bullish green. There we go. Nice, 1.62. Shows us risk is on. Like to see that clear this level here as well. For anyone that's new joining us, basically we just put consumer discretionary, which is basically the American consumer is obviously 1/3 of the US economy, and it's a huge component of the US economy. So we like to put the consumer discretionary versus the staple. And what that helps you do is it helps you see whether the stock market is defensive or whether it's risk on. And that can lead through a whole bunch of different sectors. So you'll notice so far, really since 2021, about 30th of November, we've had weakness, 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 weakness. We had a couple of rallies here. We had that big rally through that period of time. And we've mostly had weakness until recently. And all of this was signaling that maybe we've found that base where risk on is outperforming the standard defensive components. Wheat is certainly a dirty word here. We don't talk about wheat. Powell being grilled today and tomorrow, which may move the market. Yeah, so Powell's going to be talking. Which days do we have him on? Let me just have a look here. Fed Chair Powell, Wednesday. Is he coming out today? Monetary. I thought he was coming out tomorrow. Is in Wednesday. Oh, no. Yeah, Wednesday, yeah. Am I tripping or something? 9:30 a.m. Is he coming out today? I thought he was coming out Wednesday and Thursday to get grilled. Maybe I've made a mistake there. Chat, let me know. Wednesday as usual. Yeah, sneaky Papa Powell. Interesting, the Russell 2K is down. Yeah, that is interesting. So here's the Russell 2K. It's big cap day. Scroll down through here for a second. Still strong, very strong bio. Interesting hyper stocks, all strong. Labu obviously strong for that reason. Yeah, this is certainly a session where I don't really want to see the old Russell going down. Come on, Russell. Get back up. We need you above 1750 so we can feel better about this potential bullish rally. And I'm not feeling any safety until that's done. I want this done across the SPY, across the Dow, across the Nasdaq, and across the Russell as well. NVIDIA crossed the bear channel gap fill coming. Let's check out NVIDIA. It's for sure it's worthwhile looking at in this market. Yeah, big gap obviously created, but we have gaps left. Double bottom, base formation, previous kind of demand. Could it be that NVIDIA is going to go on the rally? Well, and I really don't say NVIDIA is the one to pick. It's really just more if you believe that the Nasdaq, US 500, all of these things are going to keep rallying, then yes, these are the ones that you're picking. Let's check out the US 500 here. So we've obviously got gaps still sitting much higher. 3780 is where it's going from that perspective. Let's have a look at the NDQs. Let's check that out. So that kind of got closer to filling the other day, then it made a new low. Check out how much better that is on a chart than the SPY right now. So much better. So this is just kind of angling towards maybe a very similar kind of zone up here. Very strong morning for it. 1.46 during the hour of power here. I'd look at the SPY the most today, guys. 3780. Got to be careful around there. That gap fills the big one. So check that SPY out. Right around there, 378 on the SPY. Could be like a reversal island. Okay. That'd be cool. Old reversal island. I can deal with that if we had that happening. XREN $5. Can you take a look at Tesla again? What's the next resistance level? Thanks. Yeah, sure, we can check it out. Big strong day here for Tesla. 700, man. 700. Look at it. It's a horror show, 700. 700 holds a doji, which usually means some orders sit around there. We've seen resistance support previously through that level. So it's the big zone. Usually what I would do with 700, and we'll do it next week, so we'll bring in some level data and check out the actual market in terms of the in-depth market, have a look at the orders, and we'll do some level 1 and level 2 data action on something like Tesla in the open. Would you guys like that? I think you would. So, well, hopefully you will. So definitely subscribe, because we'll go through some level 1, level 2, and we'll check it out. But basically, you're looking for how many orders are sitting at this kind of zone. 700 is a big deal. Breach of 700, next zone would be like a 760 plus, which would be really cool. Moving up fast, yeah, it's trying to get there. That'd be cool. Rami says 703 is Tesla resistance. Yep. That's fair. I'm just going like 700 flat, but you are correct. The resistance is pretty much 703. To get precise, Rami, but to get precise. Scott Fitzpatrick, $8. Thank you very much. Cheers. Keep up the good work. Appreciate it, man. Tom, did you take a look at ASML? Yeah, I haven't looked at. I looked at the chart. I haven't looked behind it. I know, Musti, you've been talking to me, and I haven't done it. Busy day, unfortunately. Tuesday and Wednesday. Tesla is like the Taco Bell in the movie Demolition Man. Hey, look, I got a Tesla. I can say it's not bad. It's all right. BTC gap, please. BTC has a gap. How's that possible? Now, BTC, if it keeps going up, you're looking towards that 23K, 24K area. But be careful there, guys, because we've seen this once before with Bitcoin, where it came up. And remember this, when we luckily correctly had this level here to stop anyone from feeling that bullishness, because this was a horror. I mean, I can imagine a lot of people got trapped into positions here. Oh, no. A cash chopper says $2. Went long IWM on Friday, and it's the only one down. No. Oh, that sucks. Not good. Oh, he means BTC CME. Okay, yep. I don't think I could bring myself to trade those BTC CME future things. Well done, PT. Certainly a interesting kind of strategy there to trail it that tight. Hey, it moved. Little 1 minute, so we'll just got you around here, yeah? Well, at least it went in. That's good. Sold NVIDIA at 167. Will redeploy after resistance at gap. Fair enough, Jerry. Absolutely. BCH. Is that Bitcoin Cash or something? What is that? I don't even know what it is. That's pretty bad if I don't know what it is. Oh, it is Bitcoin Cash. Ugh. Sick. What do I think about Bitcoin Cash? I think it's disgusting. That's all. It was disgusting here. It's just like my idea of sheep. Look, you're not going to find me much. No crypto person's going to like me very much, because I basically just go Bitcoin, 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 Ethereum, 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 and then like 2 or 3, maybe DOT or ADA. So you're not going to like me very much. The main reason I say that is because I hate going into the crypto winter. I hate crypto winter, and I don't understand the others. And you've got to be quick, guys. If you're going to trade penny stocks or crypto or any of those types of things, you have to be on it. I'm in on it. I'm already on a lot of markets. So how can I be on that and really have edge? You just can't. You have to. Bitcoin is got options. It's got CME futures. It has things like you can actually trade it technically. Ethereum to a degree, yes, as well. But as you go through those coins, like Bitcoin Cash or whatever, it's just not easy to trade technically. It's more about hype train. You get on, they've got an announcement coming up. You see that announcement, people buy into the rumor. That's the type of way you make money out of those crazy things. I think I have something called a Kala somewhere. Might have lost it actually. But I was part of their ICO, the only ICO I've ever been part of. And it was so confusing. I was like, oh my, what is going on? Where is my stuff? Where I had no idea. And I still don't even know where it is. Cash Chopper $2. Try Bitto options for Bitcoin. There you go. Thank you very much, Cash. Where are we in the BTC hiving cycle? Now we can talk. We can talk business about that. All right, let's have a look here. People forget about the old Bitcoin halving. I'm not lost off on the Bitcoin halving. See, that's something I like. I like a little bit of the old seasonality action. Let's use this poor channel. I feel bad for it. It was almost getting popular and then it died because everyone was like, no, this doesn't work. But here's the mistake they made. The biggest mistake they made, scaled ratio. And then everyone thought it was going to go to $1 million. That's not going to happen. As a market gets bigger and it continues to grow over time, you have to expect less and less percentages out of these things because it's all about market capitalization. Look, in terms of other halving cycles, we've seen, it's pretty funny because when you think about it, look at this. Look at 2012 and look at even 2016-12 average and what happens after. So what we see is often this was the low of 2012 and the low of 2016 actually happened only about 100 days, less than 100 days later, or what is that, about 100 days later. So somewhere between these areas of what we saw was the lowish point. And that's a lot of days, I get it, but this is important. This was the low of 2012. We get this massive spike down. They're almost identical in terms of days. Now we're looking at hopefully structuring up a nice base in Bitcoin over the next coming months. We'll find out what's going on with the US economy, of course. And then hopefully we go into the next cycle. So we get that usually that first rally, then a pullback, and then we get close to the Bitcoin halving. But Bitcoin halving will bring the little bulls out again. You watch them go. They'll come through and they'll be like, hey, what's going on? I'm back. That's what they did last time, and they did the time before that, and they probably will do it again. That is correct. Absolutely. You can put that on your chart. Here's the Bitcoin's mine cost, production cost versus obviously total cost. You can actually get this indicator if you're interested. Get a little indicator here. It's called Bitcoin production cost. There you go, guys. So markets are up here in the morning. It looks like the session is off to an okay start. We are relatively bullish, though you've got to remember that you do have those big gaps now. I'd love to see a nice big closure, by the way, today, where we have a nice big bullish closure, because that would actually leave a very interesting pattern behind it. And we'll find out whether that can occur. Be careful of the 3780, guys. Be careful of course, anything in around here where the big bears are going to be nasty and try to swoop in and try to short it down. We are looking ultimately this week for a new peak to be made, and then for us to pick up, hopefully, pullbacks into directional gap fills and see that really nice squeeze coming through. So it's a pivotal week. Bears, what you're looking for, this level, pushing it down underneath here, And obviously laughing at everyone all the way down to 3,500 would be the level after that. So super important week here. Big shout out, obviously, to Tiger Brokers. If you haven't already, check out the links. There is, especially for Australians that are still up at almost midnight right now. There's a free Apple stock if you open an account at the moment. I managed to get you a free GoPro stock, I believe, in the special promotion. And there's a bunch of other promotions for other countries in the description down below. So thank you for them sponsoring these videos. It does help us being able to produce them for you guys. I certainly hope you had a great session so far. I hope you've made a couple of coins, a couple of shekels, ideally, throughout the last couple of sessions. And look, it's a brutal year. It's the year of the trader. If you're not sure or you're concerned about markets or you don't have clarity, guess what? You don't have to do anything. So that's the beauty of trading. Remember these words, guys. Even write them up here. Chuck a watermark on. All it is just a standard watermark here in TradingView. Patience. React, don't predict. Slap yourself in the face with it because that's what I do on the daily. You have to do it. Lawrence Pong, Singapore, $4.48 super sticker. Thank you very much for the support. I appreciate that. And somebody says here, deflation is coming when the Fed kills the economy. Well, that's certainly possible. Deflationary boom or deflationary bust, though? What do we want? I want deflationary boom, not killing economy deflation. That's correct, Chewy. That's about right, I believe. Manuel says, thank you. Hopefully no watermelon smash today. We don't need to smash the watermelons today in the backyard at 1 a.m. in the morning. No, not just yet. Thanks so much, everyone. Good luck. Have a great day and appreciate the support from each and every one of you. Like, comment, subscribe, whatever those things are. We'll see you in the Discord community. For anyone that's in the private community as well, remember we are doing Wednesday, Thursday, and Friday this week. I'll do a special Friday because we missed the Tuesday due to this market open. So if you're ever interested in those things, links are down in the description below as well. We have a public community, a private community where we do some special hangouts and stuff for the pre-markets on the other days. And of course, we create the daily show here. So we'll be back tomorrow. I'm hoping it's green by the end of the day still. Okay. I don't care if it stops here, but give us a green. That's what we want to see. Catch up. Bye.